Happy very green Wednesday. Hopefully everyone is doing great and wonderful. All right, so I'm going to try to keep this video relatively short here because the market is very green. I tend not to get excited as much during green days as red bloody days because, well, when the market green, it's a little boring in my opinion. Because when the market's going down to Chinatown, that's when buying opportunities are everywhere. But you can very much argue that buying opportunities are very still here. So I'll go ahead and say this. There's a lot of optimism right now, pretty much inverted mentality. Inverted mentality is that there's a lot of stuff happening in the Middle East. And a lot of the stuff happening in the Middle East is really taking pressure off the stock market, selling off around AI, selling off around CapEx, selling off around pretty much fears about software companies going away, right? For the last couple of weeks, let alone probably the last month or so, software stocks, Microsoft, Adobe, Salesforce, many others have been getting hit. Palantir, my profile, my public profile and also private profile has been kicked in the groin among many of you all out there. The banking sector has been hit. SoFi has gone down because interest rate cuts are not going to be happening this year. And then you got semis, which are basically just very fearful. You had NVIDIA releasing the best earnings ever, and they experienced a sell-off. AMD experienced a sell-off. And then you have a really much bigger conflict in the Middle East than a lot of people really thought about happen. And the market's really doing the opposite right now. So we have Bitcoin on a very good rally, reclaiming $70,000, which it needs to hold at $70,000 to really keep above like a very high pivot point. And then you just look at, obviously, precious metals are still very much high. Obviously, precious metals are very high because a lot of trust in the dollar is still very much deteriorating. But, I mean, overall, the major indexes are very much green. And what is really happening today? Well, we really didn't get a whole lot of data. It's just that the sentiment around AI fears have really changed. It's pretty remarkable, right? Obviously, you got Robinhood rallying with Bitcoin. SoFi is just very much in the green. They did drop some good news yesterday about MasterCard. Yesterday, I uploaded a video talking about Anthony Noto coming in with a $1 million buy. And then you also have software stocks, Palantir recovering, Adobe is very much steadily recovering. I even have on my watch list, well, CRM, Salesforce right now is kind of being staggering a little bit. But I mean, the numbers that they put up, they're on a great trajectory, especially for next year. Next year is going to be big for Salesforce. But I mean, overall, the market is very much green, and there is a very big conflict happening in the Middle East. So why is this happening? Well, pretty much like I said, the sentiment is really moving away now from, hey, there's a whole bunch of problems in the stock market, there's a whole bunch of fears, and the market is just looking more at the Middle East. And when all eyes moves away from one area, the area that all eyes were pretty much on kind of pretty much recovers. Now, is this a bottom or is this a dead cat bounce? A dead cat bounce would be something pretty much kind of like here. Or actually, here's a better example. We go back in the SPY all the way back to Liberation Day last year. A lot of people thought that this gigantic higher, I believe the SPY went up by 10% in one friggin' day. It was massive. April 9th, ironically Wednesday, and today is a Wednesday too. Then the following day, we basically pretty much sold off. We pushed higher, pushed a little higher, sold off, had a whole bunch of red days, and then boom, baby. Then we basically pretty much pushed higher. Now, I remember Liberation Day, I was buying all the way down and all the way up. If this theoretically is a fake out, or maybe it truly is somewhat of a bottom here, and a lot of these stocks that have been beaten down, let alone the market, tomorrow, if it's a red day, typically followed by another red day, then we're going to give up all the gains that we basically pretty much had for today. So right now, looking at SPY, if tomorrow is basically pretty much trailing the 100-day moving average again, and then we trail down even below the 100-day, then you're going to realize that today is just nothing more than a dead cat bounce. But I mean, overall, like, my profiles are green. It's a pretty greeny type of a day. If you're new here, welcome. If you could do me a favor and like this video if you enjoy it, and if you want to see more, definitely subscribe for more content. I put out content typically Monday through Saturday. I'm doing a public account challenge on this channel. Looking to take this sum to 6 figs in the course of 17 months. We're already in the account challenge starting January 2nd of this year. And a lot of these stocks, or let alone this profile a couple months ago, was very much over 42-ish. I think 43 maybe, 1,000. So very much kicked in the teeth here. And I've been buying a tremendous amount of stocks, bonus shares in all these companies. I was buying SoFi last week, Robinhood too, SoFi Monday along with Hood. Adobe has earnings next week. Honestly, I really should have picked up more Adobe shares a couple days ago because I was actually down 15% on this position. But Adobe is still a buy, and it will be a buy because the stock is very much going to be doing a solid recovery to very much the $500 range over the course of this year. But I mean, we're seeing just a tremendous amount of recovery among SaaS and among semis right now. So we really got to see what happens tomorrow. If it's going to be another green day, another push higher, if it's going to kind of really just stay, I don't want to use this word because Powell loves to use this word, stagnated. It kind of really triggered a lot of people all throughout 2023 and 24. Inflation is just really, stationary, stagnated right now, right? Oh man, the market did not enjoy that terminology whatsoever. But I mean, overall, for me personally, I'm just really taking a back seat. I got positions pretty much in. And I mean, if right now is theoretically a Liberation Day 2.0, theoretically, we have some more downside to go to follow the same as last year. But then again, you got to remember that in the stock market, no drawdown is ever going to be the same. Now, you can have a very crappy beginning of the year, and then next year, you also have a very crappy beginning of the year too. You can have back-to-back beginning of the years being crappy. And then you can basically rally all throughout the summer into fall, and then have kind of like a pullback like we did around Thanksgiving. We really did not rally at all since December. We've just been in a range. But I mean, there's going to be a point in time. We got midterms coming up this year, which is going to be very tremendous for the Trump administration. They would be utter suicidal maniacs if they're going to actually let this carry into midterms. So I've been saying this for a while now. We're probably going to be experiencing maybe another month of pain. March tends to very much be volatile, looking back on history. And right now we're seeing the VIX very much actually going down, which is a good thing. The VIX's volatility index is very much inward. When the volatility index goes up, you need to be buying stocks, okay? Yes, it's going to be scary, it's going to be fearful, but you got to be buying stocks. And if you ever see the volatility index, it's actually absolutely crazy because the volatility index actually, it did not break. It challenged the high back in November, did not break the previous month of October. Obviously, we didn't get a insane volatility like Liberation Day, and then we had the Japan carry trade back in August of 2024. But if you ever see the VIX over 50%, that is when you literally deploy all cash reserves and you just keep buying and buying and buying. And then you buy all on the way up too. Okay. These little spikes that we tend to see, they're geopolitical, a lot of them, or something happens just for a time period temporarily, and they're buying opportunity, buy the dip opportunities here. So all the last couple weeks, last couple months, I've been putting up videos showing what I've been doing, what I've been buying, and this is for education purposes. Please understand I'm not an FA, but my positions are very much ready. Could I increase my positions here? Sure. I mean, theoretically, I could beef up on Hood even more. But then again, I've lowered my average on Hood from 110 all the way down to 96, which is definitely good. I've definitely lowered my average on Adobe, Palantir, Pain Palettes in its own world. Meta is actually looking to do some solid recovery here. SoFi has been beaten down, but I've been picking up bonus shares. And AMD, honestly, I ended up picking up some AMD shares on my private account at 100. It was actually overnight. I clocked in at 188.84 for some shares. Crazy. It was below $190. I have a tremendous amount of AMD on this profile along with my private account too. AMD, massive bull, along with SoFi bull too. These two companies are going to be rock and rolling because AMD is going to be a disruptor in the semis, and SoFi is a disruptor in the banking industry, which is huge, massive. So if this truly is the bottom and we're on a nice recovery, you're going to be seeing a lot of positions very much flipping. Does it mean that they're not a buying opportunity? No, because for me, I've done many price projections, and Adobe, like I said, is going to be very much higher. Hood, very much higher. Meta, as long as their revenue increases like they say they're going to do, Meta will be just fine. But their revenue doesn't increase and their capex continues to go up, and then they have to go ahead and write off a lot of depreciation because they're spending so much money on data centers. It's going to be very bad because their margins are going to be slimming, which is not good for their overall growth and also their EBITDA, their margins along their entire business model. So a lot of people are really betting that Meta is going to see extreme amount of cash revenue growth rates, but a lot of people are betting against it and saying, hey, AI is not going to produce that for you. SoFi I've covered so much. They are just a company up to the right. And as for AMD here, they're going to be doing more and more deals in the future. So I'm going to wrap up today's episode pretty much on this closing note, is that today is very much a green day. We got to see what happens tomorrow in the overall market. But I mean, yeah, a lot of these stocks are very much wanting to bottom. SoFi is very much wanting to bottom. AMD is very much on the 200-day moving average for a very, actually, about a year. It's Palantir that is really the shell shocker. They actually broke the 200-day moving average for the first time since, 2023? Yeah, you're talking a very long time. But Palantir, it looks like this company could... If I had to say a company recovering the quickest, I'm probably going to say it's probably going to be Palantir among all the stock that I own. Obviously, Hood is going to be moving with Bitcoin. Bitcoin is having a great day. Hood is going to have a great day. Meta, like I said, just talked about. Adobe is in its own world, probably getting some pre-earnings rally right now. And I got to make it a whole separate video talking about PayPal because they may actually be acquired sometime in the near future, which is going to be really good for a lot of people holding a bag. People holding a bag even like more than... I'm not even really holding a bag on PayPal. There are people that are down by 60, 70% on PayPal. It's very unfortunate. All right, everyone. Take it easy. Be safe. I'll see you all tomorrow for a brand new video. And I'll be posting more stuff as we go through this journey. All right, later, everyone.